let's investigate a range of available business opportunities, or rather business investment opportunities. So we have identified 4 types. First one is business investments, shares, unit trusts, and then government retail bonds. Now, the business investment has 4 types of investments, namely short-term, long-term, angel funding, and venture capital. Now, let's explain what these mean. So, the short-term investment enables a business to access its money within a short period of time. Also, the return on investment is lower than the return of a long-term investment. Examples such as bank account and money market accounts are examples of the short-term investment. Then we have the long-term investment. The business is able to get a higher return on the investment in the long term. However, they do not have immediate access to the account, or rather money, such as the short term does. Examples of a long-term investment is a fixed deposit account, unit trust, and shares. Then, angel funding. Angel funding refers to investors that offers financing to entrepreneurs for a share in the business. So basically, angel funding is when another business or investor comes to an entrepreneur who hasn't started a business yet, give them funding with an agreement that they have a share in the business. Then venture capital, almost similar to angel funding, but this refers to funding given to individuals or organizations to start up or expand their business. This financing provides a share for the business, and it can be supplied at an early stage or the later stage of the business life cycle. Venture capital also has a high risk for the investor, and same with the angel funding. The investor also has a high risk. Moving on to shares. A share is a part ownership of a company. Investors who buy shares are called shareholders. And then once shares are bought, a certificate is issued stating how many shares were bought. Listed companies make shares available for purchase at the JSE. And then unit trust. A unit trust pulls together a collection of investments in various companies, some high risk and some low risk. Unit trust consists of a number of different shares and securities, as all pulled together and managed by a fund manager. For example, if you invest in a unit trust, you basically, your fund gets divided into the various stock holdings that there are. So if you, for example, invest 1,000 Rand into a unit trust that has 3 stock holdings, your 1,000 Rand will divide it into the 3 stock holdings, and you will own a portion of each. So this allows the investor to buy a group of shares from a variety of companies. And last but not least, government retail bonds. So this acts as a savings scheme, and it is provided by the government. This investment has no risk, and the minimum amount of investment is 1,000 Rand over a period of 2, 3 or 5 years. With this investment, you receive a fixed return interest rate.